It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, your go-to property podcast around Australia. Yes, we are in Melbourne, Brisbane, Perth, Canberra, everywhere, as we try to keep you updated as much as possible in your local community. And it's a Thursday, August the 28th. Got to tell you this, and I'm very aware that I'm showing my age here. Barbara Eden of I Dream of Jeannie fame. I know that I've probably lost 3/4 of the audience, but she was a massive, massive star in her day. Today, she was featured on Club Random with Bill Maher. Now, if you haven't listened to this podcast, it's one that I listen to every day. I've heard all of the episodes. Barbara is now 94 and does not look her age. So much class and poise. So check that out on Club Random with Bill Maher. It is a good one. Let's catch up with Emmanuel Marios, who is in Hobart. He's in the money lending business based there. And a very good morning to you, Emmanuel. Welcome into the Real Estate Breakfast. Have you heard of Barbara Eden before?
I actually haven't, surprisingly. My age probably doesn't help.
You're not alone. There'll be a lot of people saying, who is Barbara Eden? I think Nicole Kidman played her in the movie of the same name. Now, let's get on to talking real estate. Millions of homeowners, they stand to gain from the Reserve Bank's latest 0.25 percentage point rate cut, which brings the cash rate down to 3.6%. Plenty of people will be feeling a little bit of relief with this. But remember that when the banks pass on the cut, most borrowers won't see lower repayments until their next billing cycle. Interest charges stop immediately, but repayment amounts typically lag by a few weeks. They will be coming into effect very shortly, though, so the real savings may not show up until around mid-September or later. That's a thing that people, Emmanuel, have always got to sort of keep in the back of their minds. It's not an instant thing.
Absolutely, yeah. A lot of people don't realise when the bank actually drops the rates or increases the rate, your direct debit doesn't change straight away. There is a bit of a lag, like you mentioned, but in some cases, depending on certain lenders, they won't actually update the repayments. You would actually have to do it manually yourself, which a lot of people don't actually know.
Yeah, so government incentives, we should talk about those because there were some announcements a couple of days ago.
Yeah, it was actually quite exciting. The Albanese government announced yesterday that they have changed the first home guarantee scheme. And for the listeners that are not aware of that, the first home guarantee scheme is basically a scheme where the borrower just needs to contribute a minimum deposit of 5%. And they're not required to pay any lender's mortgage insurance. And for anyone who is not aware of lender's mortgage insurance, it's an insurance premium that you generally need to pay if you have less than a 20% deposit. So the reality how it all works is, and how you got to think about it, is you put contributing a 5% deposit and the government will be paying that LMI premium on your behalf. So it's quite exciting. Most states actually had a significant cap increase. New South Wales increased to around 1.2, which was quite nice. And where I'm based in Hobart, there was about a $100,000 increase on the maximum purchase price that you can buy. And the biggest thing that really stood out was there's actually no income cap. And what I mean by income cap, in previous years, you were only able to earn up to a certain annual figure to be eligible for that particular scheme. Now they've actually completely scrapped that. So no matter how much you're earning and you are a first home buyer, you're going to be eligible to obtain that scheme, which is very exciting to hear.
Things have changed rapidly over the last 5 years, just in terms of the way that people have got to be educated. Government incentives, there have been a number of changes along the way over the last 5 years. People for whatever reason, they can be sort of forgetful in this area. Is that something that you find, particularly with the education of mortgage money, borrowing, etc.? It's continually evolving.
Yeah, absolutely. I think education's a big core of our business. We always say it, we're an education company that specialises in financial services. As you know, you don't finish school knowing how to buy a house. You just get taught how to do 1 + 1, see you later, off to the real world. So our job is to obviously educate borrowers what they can and can't do. And that's a very big key component, especially with first home buyers, because generally speaking, a lot of first home buyers would be seeking advice from mum and dad or family members, and they're providing them with some guidance. But what they don't realise, the guidance that mum and dad might be giving you might have been relevant when they bought a house, but might not be relevant today. What we do here day in, day out is I can't buy a house because I don't have a 20% deposit. Sounds like they got advice from friends and family who purchased many years ago when that was required. You can get a home now with as low as 2% deposit. And that's why it's so important to educate everyone throughout the whole process, from the initial call to the day you get your keys. It's so important, but that's what we're about.
All right, we are talking to Emmanuel, who is based there in Hobart. When we come back, because of the interest rates heading in one direction, and that is downward, we'll talk about borrowing capacity and also pick up on the 2% deposit. I know that some of you, your ears have just pricked up and thought, gee, how is that possible? So we've got more after this.
Eager to expand your property expertise? Enhance your real estate know-how with us.
All right, we better talk about some real estate there in Perth. And what I want to talk about is Perth has approved this $22 million micro apartment development on Stirling Street there, creating 88 compact units aimed at students and young professionals. It is branded as a revitalisation effort and aims to combat some of the homelessness. We'll talk about that first, and then I'll get you to sort of segue into a little bit of news about the Fraser Hotel in the city, which is just sold.
Yeah, so the state government budget has really focused on social housing. The budget obviously in WA was just this past week, and these were previously announced election promises, of course, Craig, but it included stamp duty concessions for first home buyers, loans for modular housing and shared equity loans. Those were the three big things. So they've allocated $119 million to reduce stamp duty costs for first home buyers. They've allocated $210 million for Keystart, which is where you have a shared loan scenario with the government, and that's particularly for modular homes, and I guess will take a little bit of pressure off the market at the lower threshold end where no stamp duty has been payable. I mean, up to now, having some of the stamp duty relief is great if you could find a house that sells in that price bracket that they allowed for, which was $500,000. That was very difficult. So the bottom 25% of the market is where they've allocated most of the support, to be honest. Yet the REWA's annual median here in Perth is $780,000. So that's always the challenge.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
It is a Real Estate Thursday, talking all things property around Australia. Emmanuel Marios from Hobart is with us. Just before the break, he was saying, yeah, you can get into a property with 2% deposit. I think you might have to just explain that one a little bit, Emmanuel, because a lot of people, they would have said, what did he just say?
You heard it right. There are certain lenders out there that offer as low as a 2% deposit. There's two avenues about it. One of them is called the single parenting scheme, which is the most common scenario. So if you're a single parent purchasing a property and you have a dependent under the age of 18 under your custody, you can actually purchase a property with multiple lenders, including the big fours, majority of the big fours, with as minimal deposit of 2%. So you'd only need to contribute 2% and you can borrow the full 98% from the actual bank itself, and the government will guarantee the LMI on your behalf. If you're not a single mum parenting scheme, there are some smaller lenders out there that do allow 2% deposit plus your lender's mortgage insurance. It's so fascinating. The industry and the market's changing day by day. Policies change, and we're seeing that this is becoming a more common occurrence where lenders have got bigger appetites. It's pretty evident that the property market is a very strong asset class in Australia. So lenders are starting to lend higher loan to value ratios than they were back in the day. That's for sure.
You know, I've been doing this for a long time, and you're educating me as well as the listeners, because I didn't realise that 2%. So there you go. You heard that first right here. The ratios that you're talking about, the banks, it seems, have got more money that they want to get rid of. What was something that was being purported by the bank 2 years ago? The landscape in 2025 with the rate cuts. I mean, this is quite different. Your borrowing capacity, it has all increased.
Absolutely. So from what we saw last 2 to 3 years versus to present, it's chalk and cheese. Obviously, 2 to 3 years ago, we were in COVID time, so banks were a little bit more restrictive of how much they would lend out due to the reason of COVID being in place and people's jobs were in risk, redundancies, and et cetera, et cetera. But now we've overcome that. Banks are a little bit more fruitful how much they're lending. There's not as many restrictions like there was 2 to 3 years ago. A really big common restriction was debt to income ratio. That we're seeing that's increased significantly. That's for sure. Obviously, the rates dropping does help everyone's borrowing capacity as well. Just the reality is the property is a very strong asset class, and banks just want to lend out money. They want to keep increasing their profits. You obviously saw the Commonwealth Bank's profit last financial year, So they've obviously got a lot of money that they want to lend out responsibly. And obviously, if they can do that, a lot more homeowners would get into the property market. That's for sure. Because 2 to 3 years ago, yes, the 5% deposit scheme program and the 2% scheme program was in place, but it wasn't really educated to the public. Now it's becoming a little bit more educated. You're starting to see it on the TV, online. Friends and family are talking about it. So it's definitely becoming a little bit more popular. The borrowing capacity is obviously increasing significantly as well because of all that.
Yes, the banks, it's a little bit more fruitful, which is exactly right. All right, we'll leave it there, Emmanuel. You enjoy your Thursday in Hobart and check out Barbara Eden, I Dream of Jeannie. You might even get hooked on the old TV show.
Thanks so much, mate. I really appreciate you having me on, and I'll definitely be jumping on Google and searching her up and seeing what it's all about.
Let's explore together the power of real estate.
It's good to always talk to someone within your state as to what's happening. By certainly, being pushed by real estate agents into trying to put through contracts, no matter where you are, without any conditions, it would be of grave concern to me to sign any contracts like that.
But there is a real skill, and a lot of people don't pay as much attention to terms within contracts. So just give us a flavour at the moment on what you're dealing with there in Brisbane.
Same old. The agents want as few terms and conditions as possible. And look, when you're selling a property, you want a pit bull of an agent, absolutely doing the best thing for you. But when you're buying, you've really got to try and protect yourself as you move through the process. And they are saying things like, oh, well, we've got an offer in front of us. It's unconditional. So therefore meaning that there's no finance clause, there's no building and pest clause.
It's also a great comparison to make, and I remember having my first mortgage during the very early 80s when interest rates did start to go up. The median house price in Sydney then was around 4 times the average household income. Nationally, it was 3 times the average household incomes. We didn't necessarily have a lot of 2-income families back then.
We connect you to the best real estate information across Australia. The Real Estate Podcast.